afternoon, everybody. My name is Jen Salkin, and I'm from the Benjamin Rose Institute on Aging. And thank you so much for joining us today for Aging in Place. This program is part of our series of virtual programs for caregivers that we provide each month. This program will be recorded, and we will be sharing the link to the recording as well as a copy of the slides with all of you in the next few days. So please feel free to share that with any friends or family who cannot join us. We have a lot of information to cover today, so we're going to be holding all questions until the end of the presentation. However, you may submit a question at any time using the control panel on the right-hand side of your screen. We also have a few polls throughout the webinar today, so if you'd like to use the chat panel over on the right-hand side to answer the polls, you can also answer the true and false or multiple choice questions on the screen throughout the presentation as well. Before I introduce today's speaker, I'd like to tell you a little bit about Benjamin Rose. Benjamin Rose is a Cleveland-based nonprofit founded in 1908. Our mission is to support caregivers and empower all people to age well through research, consumer responsive services, and client advocacy. We provide a variety of services and supports to help people age well in the community. That includes behavioral health services, social work, counseling, and coaching to help people achieve financial wellness and housing stability. We also operate the Rose Centers for Aging Well, our senior centers located throughout the Cleveland area, and we are a Meals on Wheels provider. I'd now like to introduce today's speaker, Sonia Edwards. Sonia is the Executive Director and Broker of Branches Real Estate, Ohio's first nonprofit full-service real estate agency and a subsidiary of Benjamin Rose. Sonia?
Thank you, Jen. Welcome, everyone. We are excited to have you here today. We have a lot of information to cover, as Jen said, and I'm actually going to ask her to go ahead and go to the next slide. And I'm not going to go over this bio with you. It has, how many years I've been doing real estate and how many years I've been working in the field of aging. But what's not in here that I'd like to share with you is that I'm also a caregiver. And a lot of my work, both in developing programs for older adults around financial and housing stability, and also my real estate work, has really been motivated and sparked due to the hurdles I've had as a caregiver. So I've been doing real estate for 25 years, and my husband is who I care for, and he is an amputee. He also is a dialysis patient. He has several ailments. He's oxygen dependent. And I sold us this home that we're in. And when we purchased it about 12 years ago, we thought it was actually going to be the perfect house for us to age in. And we knew then that some progressive things were happening with my husband's health. It's a ranch. It's one floor. So it should be perfect. It has 2 steps to come in, just 2 steps. They seem very navigatable. I'm going to say that word. No, I'm not going to say it again. You'll be able to navigate 2 steps pretty easily, unless you're in a wheelchair. We have a huge hallway, very wide, but that hallway leads to very narrow doors. We have a step-down living room. And so when my husband did get to the point where he required a wheelchair, we quickly found that navigating our home that we thought was going to allow us to age in place was not as easy as we thought. And we have had to do several modifications to get into bathrooms and to get into bedrooms and down into the living room and in and out of the front door and even into the kitchen because that doorway wasn't wide enough. Really, the only place that was accessible in the whole house was the hallway once you got in. And so I wanted to just share that little bit of background with you as we go through this, that many of this I've lived, and I wish someone would have told me more about creating a plan long before we purchased this home. So Jen, if you could go to the next slide. Today we're just going to talk a little bit about the services that ESOP and branches offer. I'm going to give you an abbreviated version of our Aging in Place Knowing Your Housing Options series. That's a 4-day series of about an hour and a half each day. And so I'm going to try to condense some of that into 45 minutes. Those workshops are offered monthly and they are free. So we're going to make sure you have the link if you have anyone or you yourself are interested in actually attending the full series. We'll look at a few of the things that we talk about in the curriculum today. Is your home safe? Is it accessible? Is it affordable? And talk a little bit about how to use the home equity in your home to keep your home. We usually get a lot of questions around reverse mortgages. The next screen just tells you all of those series that are typically offered in our Aging in Place workshop. So we'll go ahead and move on. Jen talked to you a little bit about Benjamin Rose's mission and the work that they do. So I wanted to just kind of tie in some of our other missions. So ESOP's mission is to help adults in all stages of life achieve and maintain financial wellness and housing stability. And then Branches, which is our real estate arm, which we'll talk a little bit more about in a minute, helps people transcend poverty by making the dream of homeownership available, affordable, and sustainable for more members of our community, while at the same time contributing to neighborhood stabilization. And we'll talk a little bit about how we do that. So ESOP has lots of programs, both financial and housing programs. They are a HUD certified housing counseling agency, and all of their programs are free. They offer, as Jen mentioned, financial counseling and coaching. There's lots of different education workshop series, wonderful match savings program. They have a vision program we'll talk a little bit about. They have some new programs that are interest-free small dollar loan. They also have an interest-free property tax loan for older adults. They provide mortgage assistance. We do rental and transition counseling, pre-purchase and homebuyer education, foreclosure prevention. Those are just some of the few. And then Branches, as Jen mentioned, is Ohio's first nonprofit real estate agency. We first created our real estate agency was in 2014. And what makes us unique is we focus on missions and not commissions. And how we do that is our agents are not paid a commission. They're actually paid salary or hourly. And what this does, it is allows our agents to really focus on providing the same level of service, whether they're helping someone buy or sell a $40,000 home or a $400,000 home. When they're not motivated by commissions, we know that we can standardize that service across the board and make sure that we are providing the same service to everyone. And we have a few things that we specialize in, and one is helping first-time homeowners purchase those first homes, and then older adults gracefully transition out of their last homes, and that's more around what we'll talk about today. And then we are senior real estate specialists, most of us are. The rest of our agents are working on getting this. What that means is we've had extra training and courses to receive a designation from the National Association of Realtors that says we have the knowledge and expertise to guide home buyers or sellers who are over the age of 50 through major lifestyle and financial transitions. And so I'm going to give you a link on how to look up other real estate specialists, senior real estate specialists, when we get closer to the end. So I have a question for you, and if you are willing to share, if you could in the chat box, quickly, the first thing that comes to mind, in one word, say what home means to you. And I'll give you a few seconds to do that.
A few responses: comfort, safe, stability, security, peaceful, family, sanctuary.
Those are all of the answers that I thought would come in. Jen, if you'll go to the next slide. What we know is, and what we found from asking that question over and over again, is home is a feeling. It's not a place. We hardly ever have anyone say, oh, it's 2 bedrooms and 3 baths, or it's in this certain city, or it's always how they feel when they think of home. And I think that's important context. And typically when I work with anyone, whether they're looking to stay in their home or they're looking to transition out, one of the first things I ask is this question, because I try to get us in the place of realizing that if it is a transition in the end, if that's what we end up doing, that home is going to go with you. You're going to take safety with you. You're going to take all of those things that you said home means to you. I helped an older adult recently in Shaker Heights who did not want to move when she first came to us. But when I asked this question, her answer was independence. And that was what was most important to her. And we worked together for a long time looking at all of the options. And in the end, she actually did decide that transitioning to an independent living apartment was really what she wanted to do. And she said she hasn't had more independence and freedom from the burdens of her unaffordable taxes and housing violations and mortgage than she has now. She's more socially active. She gets to do all of the things that she loves. So I ask people to just think about this when we get started, whether it's for yourself or someone that you care for. It's never too early to start thinking about a continuum care plan. Jen, if you can go to the next one. So a continuum of care plan, when we talk about housing, really looking at what are the health and support needs that are needed, not just now in the present, but in the future that you can maybe foresee down the road. They're determined, your care plan is going to be determined by how quickly decisions have to be made. And always remember that this continuum of care is never tied to an age. So when you're creating your plan for your family, you never want to say, when I get to age blah, 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 that's when I'm going to do this. It really needs to be tied around when I can no longer, or when I want to do this or that. That's what you really need to be looking at, and not a number, because we all age differently. We all have different abilities and things that we have that are barriers that come at different ages. So when you create your continuum care plan, it's first important to look at, where are you? Are you in the no urgent need category, right? Which is going to give you the most time to really think ahead, to research your options, to talk to professionals, to create that team that's going to help you. You're going to look at strategies, and you're going to discuss choices with family. And this is always a hard one. I think for a long time, we would go in the other room and we would talk about sex. Well, now that's everywhere. It's on every TV commercial. It's on every TV channel. People are not afraid to talk about sex anymore. But people still go in the other room to talk about money. And I think it's a very hard conversation. It becomes much harder than any other conversations we have to have often. But I think trying to figure out a way to open up and have those conversations as early in the process as possible is really critical. If you're in the no urgent need category, you can take some preventative measures, right? You can make some home modifications at your own pace. You can maybe move into a new home or an active adult community or a condo or things like that at your own pace, and when you're looking on down the road. So that's the no urgent category, no urgent needs. The next one would be progressive needs. And on the progressive needs, that's when you're starting to see those gradual changes, whether in your health or your life or your financial circumstances. And you know that the progression of what's happening is going to require some adaptations. Like I said, we knew that we needed a one-story home, and we knew that the progression was going to lead to that need, that we didn't want something with stairs. Stairs, to me, I was thinking a full set of stairs, and again, not the 2 steps coming into the home or the 1 step down into the living room. This gives you some time to research options, but not as much time as that no urgent need. This is, it's progressing and it's going to come. Just how quickly things progress is going to dictate how much time you have. And this gives you some time to really look at supportive services in the community, find out what those guidelines are, find out how you apply, are there wait lists, all of those kinds of things. And then lastly is the urgent needs category, where there's maybe been a sudden change in life or health conditions. And although we were moving down the progressive continuum, ours turned to urgent when my husband had the amputation and required the wheelchair, because that's when, prior to that, he could still navigate with the use of a walker or a cane. But once we got to that place of amputation, which was sudden, that's when things required us to make urgent changes. This is when you have to make immediate adjustments, like I just said, modifications, as I said, and supportive services are often necessary in the urgent needs category. So figuring out where you are first is important. Assessing your home for safety is another great place to start. So once you've figured out which category you're in, if you're in the urgent, progressive, or non-urgent category, then look at the safety of your home. And we have a guide that goes along with our workshop series, and we give a checklist on how to check all of these places in your home to see if it's safe, looking at your exterior and your interior entrances. Can you get safely out of more than one door? Can you get in or out of any doors? What are your interior doors and stairways like? Do you have lighting? Do you have rugs? Those kind of things. And then bathroom, kitchen, living room, dining room, bedrooms. We go through all of those. And just for time's sake today, I wasn't able to do that, but I'm happy to share that checklist with you. And then falls are serious and costly. And I'm probably not telling anyone on this call anything they don't know, but 25% of Americans age 65 and over fall each year. And less than 50% of those that fall tell their doctor when they fall. And every 19 minutes, an older adult dies from a fall. And more than 95% of hip fractures are caused by falling. And this was one this is a statistic I did not know, but 20% of hip fracture patients die within 1 year of that hip fracture. And there's a lot more information on the CDC's website around falls and more statistics. But the reason that I wanted to talk a little bit about falls is it comes back to that. When you're assessing for safety, make sure you're checking for all of those things that could create a fall. So I usually will give a lot of different tips on fall prevention. I'm going to tell you just a couple. One is good lighting and those rugs, as I said, and then eye screenings and getting your vision checked often, especially if you do have a chronic illness that could affect your vision changing. And if you are unaware of this, Prevent Blindness Ohio has partnerships with several agencies in Cuyahoga County, and Benjamin Rose is one of those agencies. And we can actually provide free eye screening. And if someone does not have eyeglass insurance, then we can provide an eyeglass voucher to get new glasses every 2 years. And they're really nice glasses. We've been able to help a lot of people with those vouchers. And Cynthia Walker, and who is our benefit assessment specialist, can do a virtual assessment. Prevent Blindness is allowing her to do those virtually. There are some check boxes that actually don't even require the actual, cover one eye screening, but just some questions that could connect you to that free voucher. So if you or someone you know is in need of glasses, I think our eyesight is so important, and it affects almost every area of our life, that please reach out. And you can call Benjamin Rose and connect to Cynthia, or her direct line is 216-373-1650. And again, Jen's going to send this out to you, so you'll have that information. So next, look at housing affordability. What percentage of income do you spend on your housing cost? And when we say housing cost, it's your mortgage, your insurance, your taxes. If you're in a homeownership association or a condo, what are those dues? And then maintenance and repairs. And if you take those total housing costs and you divide them by your total income, that will give you your housing cost ratio. And the Department of HUD says that 30% is affordable. And so if your amount of your percentage is higher than 30%, you may want to look at some different options. and not necessarily moving options. I'm just talking in general. There's some options that a housing counselor could help you with. And then also when looking at affordability, just ask yourself some questions around, can you afford the mortgage, the taxes, the insurance, the upkeep? Do you need modifications or repairs that you can't afford? Could you pay for yard work or housekeeping if you needed it? I actually live on an 1.5 acres. We have lots of grass, and my husband always loved to do the yard work. And this is now a burden for me that we now have to pay for, because I tried to learn how to ride the riding lawnmower, and I won't tell you how embarrassing it is that it was not as successful as I had hoped. And I just don't have time. It takes a very long time to mow an 1.5 acres. So now it's something that we actually have to pay for. Could you afford a home health aide at an average of 15 to 20 an hour if you needed it? So just some more things to consider. And then, do you have a budget? So I'm a strong advocate of a budget. And a budget is not what you think this is what's coming in your head and this is what's going out. No, it's really a written plan, a household spending plan, we actually like to call it, rather than a budget. I think it sounds a little nicer, but it's the roadmap. And whether this is for yourself or someone you're caring for, it's the best roadmap and gift that you can give someone when you ask them to help you with their finances. If someone needs a power of attorney, having a budget, and we've done budgeting with a lot of people who, with the client themselves and the person who is or going to be their power of attorney, just to make sure everyone is on the right page and the same page and knows that this is how things have been and how they want it. And a budget is your key to reaching goals. You know, it's your plan to get there. And I would strongly recommend that you use a HUD certified free housing counselor. And at the end of the presentation, I tell you how to look one up. But someone that wants to charge you, I would just be a little bit leery of, unless you're getting true financial planning, which is not, what financial counseling is. You can also contact us at ESOP or Benjamin Rose, and we can connect you to a housing or financial counselor. So using your home to keep your home, we just talked a little bit about assessing, is it affordable? If it's not affordable, there's some options if you have equity in your home to use your home. There's some single purpose grants and loans. There's home equity loans, there's home equity lines of credit, and there's reverse mortgages. So I'm going to hit on just a little bit of that today. And I use the word equity, and I just want to make sure that you know that equity is the amount that your house is worth less any amount that you owe. So if your house was worth $100,000 and you owed $50,000 in a mortgage or some other type of loan that was secured with your home, then your equity piece would be $50,000. So when you're looking at financing options and how to use the equity in your home, there's some questions you need to think about, and is, why do you need the money? What would the money be used for that would make you financially sustainable in your home? Do you need it to pay down debt? Because maybe if you just didn't have that amount of debt, you would have enough every month to meet. Or maybe you need to make some home repairs and you just don't have that extra cash laying around to do that. Or maybe you need funds each month because each month you're a little short on those household expenses. And then you have to think about, how long do you need the money? Is it for an immediate one-time issue that you'll pay for and then you'll be good? Or is it to pay for many years of ongoing household expenses? So those will be the questions you should consider when you're determining what kind of loan to get or product to get. So we'll talk a little bit about those 4 loans that I just mentioned, the single purpose. We'll talk about equity loans and lines of credit and reverse mortgages. We'll start with single purpose loans and grants. And some of those are things like home repair and modification loans and grants. Cleveland Housing Network Partners has a program, a grant program. The Western Reserve Area Agency on Aging can offer some assistance there. Some other things that you might not think about when you think single purpose. So I mentioned earlier that ESOP has the interest-free small dollar loan and property tax loans. Those are examples of things that are only for a single purpose. And they're great if you fit into that single purpose that's what you need the money for. And if you meet all of the guidelines, then, you know, they can be a great option. But sometimes it's hard to fit all of those pieces together. So you need to know that there's other options. But it's a great place to start, is, you know, finding out if there's any grant programs or single purpose loan programs. They usually have very low or no cost and very low or no interest rates. So that's your best place to start if that works for you. The second would be looking at a home equity line of credit, or affectionately called a HELOC. And a home equity line of credit is a lot like a credit card. If you think of how a credit card works, they'll approve you for a certain amount of money, let's say $10,000, and you can withdraw that money as you need it. And your payments are going to be based on how much money you have taken out and how much money you owe back. So just like a credit card, if you had a $10,000 limit, you charge something for $3,000, your payment's going to be based on that $3,000. That line of credit works very similar. They could offer you interest-only payments, which, be careful and make sure you understand it. If that's what they do, that means that that principal balance is staying and not going down if you're only paying interest. If that happens, there's often a balloon payment. And balloons are usually for happy times. You do not want to see balloon payment when it comes to mortgages, because what that means is on a certain date, that full amount is going to be due. And if you don't have that full amount, they could foreclose. So make sure you understand all of the terms of the home equity line of credit. But they are good if you're, or at least worth considering, if you're planning on home improvement projects that you want to do a little bit at a time and you only want to pull out what you need, maybe pay back some, then borrow a little bit more out of that account. Or you need to consolidate debt with the flexibility to borrow in the future. Or you just want to have an emergency type savings, not that you plan on really using this, but you want to have maybe just that safety net that if something were to happen, you know you could access those funds. One thing I would say, that would be a great thing to do, but make sure you know if it's going to close in 10 years. And if that's the case, you can reapply to keep it open, but just make sure you know that, because you don't want it to close in 10 years and then you need it in 10.5 years thinking it's there and it's not. So again, make sure you understand the terms. And then the next is home equity loans. And a loan is very different than the line of credit we just talked about, because the home equity loan is pretty much a second mortgage. If you think about what it was like when you got that first mortgage, you get one set amount and one lump sum, and you're going to have I'm going to say a fixed payment over a set amount of time. If you have a variable interest rate, that could change a little bit, but generally you're going to pay it back over 15 years at X amount of interest, and it's going to be X amount of dollars. That's good to consider if you have a larger home repair project, maybe more than 10, 15,000, or you want to consolidate debt and you don't need access to those funds going forward, or you just have one thing that you need to do and you're not going to need money later on. And you want that fixed set payment would be the other reason to get that. One thing I want to note that's very important to remember is that home equity loans, lines of credit, and even sometimes those single purpose loans are secured by your home. And if you can't pay them back, you could put your home at risk of foreclosure. So make sure that you have a good plan in place and only borrow what you need. So I have some true and false questions for you, and we're going to try it in a poll situation, and hopefully you'll be able to answer those with us. So the first one is, if you get a reverse mortgage, you're selling your house back to the bank for much less than it's worth. True or false? We'll give you just a couple more seconds to answer.
Yeah, 88% said false and 12% said true.
Great. So the answer is false. You are not selling your house back to the bank. You actually continue to own your home. So I'm not gonna tell you any more than that, because I don't want to give you answers to the other questions yet. So the second one is a reverse mortgage is a loan that never has to be repaid. True or false?
Okay, we had 5% said true and 95% said false.
That is true. You yourself may not have to pay back the loan, but the loan does have to be repaid either by whoever is the last person to move out of the home, or if family members want the home as an inheritance, then they're going to have to repay either what the house is currently valued at or what's owed on the loan, whichever is smaller of those two amounts. So next one, if you get a reverse mortgage, you're going to get a lump sum of money after closing and no more money after that. True or false?
This one is coming in more split. So we've got 58% said false and 42% said true.
Okay, so this one was a little bit of a trick question, so I expected that answer. So it used to be on a reverse mortgage, you could take the full lump sum in the beginning, and then you would not get any more money after that. They've actually changed the law on that, and now you can only take a maximum of 60% of the loan amount that they've approved you for in the beginning, and then you have to do something different, which we'll talk about those other options with that other 40%. So they no longer allow you to only get one lump sum of 100% in the beginning. So final, true or false? If a house has a reverse mortgage on it, the lender will pay for the taxes and the insurance.
Okay, we have 70% said false and 30% said true.
Thanks, Jen. The answer on this one is actually false as well. And this is where we have a lot of people that have gotten in trouble over the past because there really wasn't enough education in the beginning around reverse mortgages. The lender will not pay for the taxes, the insurance, or the maintenance and upkeep if you have a reverse mortgage. So the homeowner is still required to pay for those things. So it's taxes, insurance, and upkeep. If you fall behind on those things, if you do not carry insurance, they will put a forced place insurance policy and charge you for it. If you do not pay the taxes, they could foreclose. And this is true also of a homeowners association. So if you had a reverse mortgage on a property that had a homeowners association, they will not pay those for you, and you can get foreclosed on based on not paying those. And they will send people out to check on the maintenance and upkeep every now and then from the street, an exterior visual. They don't come in your home. So I would just strongly urge you to proceed with caution. Reverse mortgages are not necessarily bad products. It's just you have to know what you're signing. So make sure you understand how a reverse mortgage works and you understand the documents before signing. Know your options. You may have a better choice than a reverse mortgage and just may not know that. They do require you to meet with a HUD-approved housing counselor who's actually certified and specializes in reverse mortgages now, which they did not do in the beginning when reverse mortgages came out. Sometimes you'll hear reverse mortgages are scams or they're bad. And it's not necessarily that the reverse mortgage itself was a scam. It was there wasn't enough education, or the reason someone's getting a reverse mortgage is truly the scam. So there was, in the Cleveland area, we saw a time period where there was people knocking on doors and telling the homeowners they needed repairs, and then telling them they knew how to get them the money, and they were signing them up for reverse mortgages and then taking the money and oftentimes not doing the work. Those are the kind of things that are scams. But there are, and it's like putting a round peg in a square hole, there are cases where reverse mortgages are great options, but every situation is extremely unique, and you have to look at all of those factors. So I'll give you just a few basics around what reverse mortgages are. They allow you to access a portion of your equity as cash. So you become, the bank becomes the bank, you become the bank, and the lender becomes you. They give you a portion of the money. You have to be 62 and over in order to qualify. And it's important to note that's every homeowner who's going to be on that deed must be 62. If one of you is 59 and the other is 64, the 59-year-old is not going to be on the deed or the mortgage. So that's very important as we talk about the next facts around a reverse mortgage. So there's no monthly payments as long as one borrower continues to live in the home. So if we look at the scenario we just talked about, if someone's 59, they're not going to be a borrower. So when the 64-year-old no longer lives in the home, that's when this reverse mortgage is going to be due. And that 59-year-old will have 1 year to move out of the home, figure out how to refinance the home, sell the home, those kinds of things. You do pay, again, for your taxes, your insurance, and upkeep. And interest is added to the loan every month, causing your balance to grow. So the money that you have borrowed, that you've actually taken out, interest is going to be added to that. On the other side, if you have money in a line of credit with your reverse mortgage, interest will be added to that balance, and the money you can access will also grow. So that's confusing, but the money you've borrowed, interest is going to grow on that part, on the amount that you owe, but money that you have not taken out, interest is going to grow, and that balance is also going to become higher. And when you do need to access it, you'll be able to access more money. When the last borrower dies or moves out of the home, that's when the loan becomes due in full. And again, you have 1 year from that date for yourself or your family. So you'll also hear home equity conversion mortgages and HECMs. So that is actually a reverse mortgage type. So most people have heard of FHA loans when they buy a home, a Federal Housing Administration loan, which is part of the Department of HUD. They back or insure loans. A HECM is an FHA reverse mortgage. And a HECM is the only kind of reverse mortgage I would ever recommend to anyone, because it has rules and protections that have been set forth by HUD to protect the borrower. Whereas if a reverse mortgage is not a HECM and it's not under the FHA guidelines, those are the ones that could get a little bit tricky. And there could be some hidden clauses in there. So you always want to remember the term HECM, and that's what you want to look for, or help your family members or loved ones look for if a reverse mortgage is something they would like to learn more about. So the ways you could get the money would be a line of credit. So very similar to the equity line of credit we talked about earlier, it would be set up as an X amount of dollars that you can access and only pay interest on the money you use, meaning you're not going to pay it. It's going to grow in that other account of what's owed later. And then the money that you need to borrow, again, if you're not borrowing it, that's going to grow. So there's also monthly options of payments, and there's a tenor payment that says you'll get an equal monthly payment as long as a borrower lives in the home. So that's the other reason that it's important that both borrowers are on that mortgage. Or you could get a term payment, which is for a set period of time of equal monthly payments. The risk you take with a term is you may say you want a 20-year term, and what if you live 35 more years? you're going to have those 15 years where you don't get those payments. So the tenor payment is usually going to be a little bit lower than a term payment because they're guaranteeing it for as long as you live in the home, but it's the safer of the two. Or you can take, again, part of that lump sum up to 60%. So this is where it gets real confusing. You can take a lump sum, set up a monthly payment, and then keep the rest as a line of credit. So you can combine all of these if you wanted to really have financial, safety in getting that lump sum now to take care of what you need, getting that monthly payment to cover any shortage you would have each month, and then keeping that line of credit for an emergency. And then how can you spend the money? So if you get that lump sum in your hand, what can you do with it? You can do anything that you want with it. There's no restrictions on any of the money as long as all of your existing loans and liens are paid in full, which the title company would do at the time of closing. So we have another poll question, and this one we're going to be shifting gears just a little bit. Just think for a minute, what would you like to do less of? So for me, interior and exterior maintenance, I'm fine with the interior, but I don't want to do exterior maintenance. Things like snow or leaf removal, cooking, housekeeping, driving. Are there things that you would like to do less of? There's days I could check every one of those boxes, to be honest with you. I have a long commute. All right. See, I'm not alone in that interior and exterior maintenance. 58% of you said you wanted to do less interior and exterior maintenance, and 54 right behind with that snow and leaf removal. 25% want to do less cooking, 38% housekeeping, and 8% driving. Maybe that's because we aren't driving much these days. So let's look at the other side of this and do one more poll question. What would you like to do more of? If money and time was not a factor, what would you like to do more of? Volunteer, maybe attend cultural events or social events or educational events, or travel? I think we all would like to travel more right now. We've been confined. (92% said travel. Volunteer, 42%. Attend cultural events, 45%. Attend social events, 32%, and educational, 29%. The reason that I ask those questions is when you start looking at housing options, whether it's now or in the future, I think it's important to also think of what are the things that we want to do more of and less of, because truly our quality of life is going to be based around those things. It's going to be based around, are we doing enough of the things that we like to do? Are we not doing the things that we don't like to do or maybe can't do anymore? And so keeping an open mind as we look at housing options and what's out there and thinking through our own plan, I think it's just really important to think about those things. I tell first-time homeowners when they're purchasing to not marry their homes because they'll end up divorced. If you're working so hard to just pay a mortgage, then you're going to hate that house in the end. There's no quality of life there. And I feel the same no matter what age we are. I just get that opportunity a little bit more when I'm working with first-time home buyers to educate them and really make that a strong priority in their search for houses. So when you talk about looking at different housing options as we age, many of the options are going to be based around activities of daily living, and most of us know what that is. It's, the ADLs, and it's the ability to perform our activities of daily life. And some of those are bathing, dressing, toileting, eating, transferring. And about 3/4 of those who are 85 or older report some degree of permanent limitations in performing activities of daily living. And a lot of the housing options, they're going to determine whether or not you can move to that facility or that location based on your ADLs or your loved one's ADLs. So in our regular workshop, we would cover all of these different kinds of housing, senior house, apartments, condos, independent living, assisted living, skilled nursing and memory care. Co-housing and shared housing are kind of new. If you haven't heard of them, co-housing, when we send out the information to you, I'll make sure you get a link to watch a really cool video on co-housing. And it's more of a neighborhood type feeling where people are intentionally moving into areas together, and they're sharing things like the gardening tools or laundry rooms, things like that, but they're intentionally doing it and they're intentionally creating spaces. Sometimes they do shared meals for their entire co-housing unit. And then shared housing is really just having roommates, but there's some really cool apps out there now to help pair older adults with roommates. And I know we're running short on time, so I'm just going to quickly go over our key takeaways. Remembering that developing a housing plan is a process, and there's nothing easy about any of this. I work with a lot of older adults from the beginning to the end, and it's not easy to go through and unclutter 50 years worth of physical things, 50 years worth of memories. It's hard. It's hard work each step. The end result is usually wonderful, but each step is difficult. There's some key factors to remember in looking at safety, accessibility, social isolation, and affordability. And remember to keep an open mind. And then I gave you some links as you create a team of professionals. So I gave you the link to find a free HUD certified housing counselor, a senior real estate specialist, a certified relocation and transition specialist, and also the Aging and Disability Resource Centers. So those links will be in the PowerPoint for you. And then remember through all of it that home is a feeling and not a place. And I know we are I think right at time, so I'm gonna turn it over for any questions that maybe have come into the chat box, or if anyone has questions. I'm not in a hurry to leave if anyone wants me to hang out for a minute, but I know we're pushing up on time.
We do have a couple of questions.
Sure.
So the first one, is there an income limit to receive your services?
Actually, no, our services are not income bound. And all of our services right now you can access virtually. So that makes it a little bit more convenient. But no, we serve everyone of all incomes.
Great. The second question is, do you have services to assist with medical and financial power of attorney?
So we actually have another workshop that will go over those documents, but we are not attorneys, so we don't practice law, but we will give out the fill in the blank forms that have been created for us. And we can talk through a little bit of how to fill those out. We talk a little bit about transfer on death deeds, but we can also connect you to an attorney. If income eligible, we can connect you to legal aid, or we have some other great attorneys who do things at very reasonable prices to help people get those things done.
Thank you. The next question, are there any services available to help with home modifications if you can't afford it?
So there are, and those are extremely targeted at where you live. So there's some that we can look at. Different neighborhoods that have resources. Some are countywide, some are age or income requirement, have those tied to them. So my suggestion would be, if someone needed that, to reach out to one of our housing counselors to really sit down and look at all of the pieces and help you determine which ones would be best. But there are definitely resources out there.
All right. Do you only serve residents in Cuyahoga County?
So we do not, because our services are virtual, we can go beyond Cuyahoga County. And even our real estate services, we have an agent all the way in Trumbull County. I myself live in Portage County, so I know some of our resources here. So we can go beyond. We struggle a little bit if we get out of Ohio, and we know the most about the resources in the areas that I just mentioned. If we get beyond that, we can help, but it might be partnering with someone else to provide that help.
And the next question is, do you have any resources for assistance with affordable lawn care?
It would depend on where that would be. There are some communities where if someone is older, there are either some really affordable options, or there's some council people who actually are providing that service through volunteers. So again, that might be, you can email me, and I can definitely look into that a little bit more based on where the residence is. But there are options.
Okay. One more. What are the thoughts or your thoughts on neighborhoods that are redeveloping and property taxes increasing for senior citizens?
So this has been a struggle. We actually help a lot of older adults who come to us in this situation. I want to see, our community thrive and flourish, but not at the expense of our older adults or others who cannot afford taxes. I think there needs to be a very slow progression in those tax increases, and I think those on homestead exemptions, so those who are 65 or older or disabled, who meet a certain income guideline for the county, should not have those increases, and that would be my advocacy to the county. I've said that to them, but we also will work with the county and go to the Board of Revisions to say it's not fair. We've actually had some of them reversed and brought down a little bit, but we're not always successful. But we do go in with comparable properties and show that a 75% increase in property taxes in 1 year is extremely unfair. And we've won some of those, but I don't agree with how fast they're doing it. And I think there's some ways they could put protections in for our older adults, and I think it's around the homestead exemption.
Thank you. And then the last question is, can we reach out to you for more or added information?
Absolutely. And my information is up on the screen, but you can call me, you can email me, and I would definitely, if it's something I don't know, I'll try to connect you to the right people who could get us those answers. But Jen will send out the link for our full workshop series, which, like I said, I try to condense into 45 minutes when it's typically about 6 hours worth of information. And but again, there's lots of other things that you could have questions about that I would be happy to talk with any of you about.
Great. Thank you so much, Sonia. This was such a great presentation. As Sonia said, I will be sending some more information over the next couple of days, and you'll receive a copy of the slides and the recording. We offer these virtual programs monthly, the first Wednesday of the month at noon. So be sure to join us next month on May 5th at noon. And we're going to have someone from our WeCare team to talk about caregiver supports. And you will receive an email invitation for that. So be on the lookout. Have a nice day. And if you're in Cleveland, enjoy the sunshine we're getting. Bye, everybody.